Happy holidays. Welcome to the December newsletter, last newsletter of the year. Here as we wrap things up. So this month, we're going to focus on looking at that beacon data as we typically do. We'll throw in some MLS data. I'll make some thoughts or quote unquote predictions on what I think is going to happen next year at the end of the video. And then next month, that's when we'll focus on how the year went for 2025. I want to wait till we have all that data available, and then we can really compare 2024 compared to 25. So to get us started, we'll do our beacon report glance here at the median sales price, drop down to $698 for the month of November. We've seen this happen now for quite a while, right? With these big peaks and valleys in the median. Remember, it's half above and half below, so always have to take that with a little bit of a grain of salt. So number of sales has been better in 25 compared to 2024, and that's nationwide and here in our region as well. According to the Beacon report, we had 122 sales in the month of November, which if you look back at the last couple of Novembers, this is really right on par for what we would expect for this time of year. The positive thing is this year we had 5 months with over 150 sales in a single month, where last year we only experienced that one time there in the month of April. So we've seen that positive increase in the number of sales. Days on market, it's definitely been moving a little bit slower the last few months here. November recorded 56 for the median days on market. I'll show you the MLS data here in a second. It definitely reflects a higher number than that. And I would suspect when we get the data for December, we'll probably be right around 50-something days on market, as I can feel the market has slowed a little bit here in December. And the last beacon slide we'll take a look at is the months of supply, down to 3, totally normal, like I've been saying for the last few months. And as you guys know, a little bit more seasonal here, as we tend to see the months of supply come down. You get into holidays, you get into winter, and people just pull those homes off the market. All right, that's enough of the beacon slides. I'll show you this chart. I've been showing this to you for a little while. I find this really interesting. I run this data every Friday. This is straight out of the MLS. You can see this week, 432 active listings compared to 398 this same time last year. So we're seeing that number start to come together. We had a lot more inventory this year than we did compared to last year, but pendings are actually up compared to a year ago, and solds are very similar. You can see that average sales price sitting at $891. The number that stands out to me the most here is that sold versus original, which remember is their original list price compared to their final sales price. That is probably the highest I have seen that number in a very long time, at least the highest I remember. We typically around 96 to 98, and to see that at 94 goes to show how much prices are coming down from their original list price. A lot of that has to do with maybe sellers starting much higher than they should have to begin with, or a little bit more motivation to get their home sold, so they're making those price reductions. And as you all probably know, Fed met last week, did make another adjustment on the prime rate. Really no big changes in the mortgage side of things. You can see here from our chart from Fannie Mae, Freddie Mac, current 30-year fixed rate mortgage is about 6.2, 15-year, it's about 5.5. We've been sticking around that 6.25 for quite a while now. As the Fed adjusts that prime rate down, they are watching inflation very carefully. You can see we ended the year at about 3% average inflation for the year, so we haven't done too much better on that front. They really wanted to get to 2, but I think with the data that's coming out of the job market, they're responding, trying to adjust those prime rates down, but have to be careful here to not adjust things too quickly and cause inflation to spike again. Okay, let's talk about what might happen next year, right? Crystal ball time. Here's a chart. I actually just saw this last week. According to Realtor.com, this is a good picture of kind of what has happened, pre-COVID, through COVID to where we are now. 2019, this is nationwide, 1.2 million active listings. And you can see as we went into 2020, 2021, the number of active listings dropped substantially. Homes were selling so quick. Those are also 2020 and 21 are the years that we had the most number of sales since the boom in 2008. So since then, we've seen this inventory slowly come back up. And here we are in 2025 with 1.3 million active listings. I do think this is going to continue to be a trend. I think we will see a lot of inventory again, especially coming on in the spring and into the summer. So I think we'll have a high level of inventory, which could affect prices as well. Interest rates. My personal opinion is they're probably going to stay around 6. We'll get a little bit below 6, maybe 5.8. I just don't see why those rates are going to come down dramatically again, because we have to be so careful with inflation right now. I also think the number of sales is going to increase in 2026. We might see about 10 to 15% more sales. And again, I think that kind of all comes into the storm of a little bit of adjustment on interest rates. There's going to be a lot of homes to choose from. You're going to see a lot more people being motivated on their price. If somebody bought something 2 or 3 years ago, it may not be worth as much as what they paid for it, but somebody who bought a home 10 or 20 years ago still has a lot of equity in there and a lot more room to adjust the price down. So those are my thoughts, kind of my guesses of what happens in 2026. As I said, next month we will take a good look at all of the data for 25 and see how things ended. Have a great Christmas, a great New Year. Enjoy all your holidays, and I'll talk to you guys in January.